We are on with the latest Baltic Roundtable of Economists, which now is a once in a quarter tradition here at Median Report. My name is Chris Peterson, and I'll be hosting it also this time. Today you'll hear from three distinguished chief economists: Līva Zorgenfreija, representing Swedbank Latvia. Hello, Līva.
Hi.
Yeah, Tadas Povilauskas from SEB Lietuvoje.
Hi.
Hello. And Lenno Uusküla, chief economist at Luminor Bank, representing Estonia. Hello, Lenno.
Hello.
So the rules are very simple. We start with 3 to 4 minute monologue from the economist, then followed by questions either by me or colleagues. So at the end, if we still have time, I have a few questions prepared for all of you. So let's just jump in, and we start with Estonia this time. Lenno, do you see that 2025 has been a year of awakening for the economy in Estonia?
Absolutely. It's been a good start, at least, for the awakening, because for a few years, Estonian economy has been declining. And even worse when you do it calculation in per capita terms, because we did receive quite many Ukrainian war refugees. And this year has brought growth. So the latest number is 0.9 year on year, which is not healthy growth yet, but it's at least a game changer in the direction. What is sad? So we actually expected 1% growth for this year, but we expected more broad-based growth. Of all economic sectors benefiting. What we have seen is that the electricity sector benefited quite a lot from detachment from Russian networks, because the network services, our oil shale factories, are now up and running. And then manufacturing has improved. Not even quantities, but value added has improved in manufacturing. So this is where the growth is basically coming from, and the rest of the sectors are adding up to zero, basically. But we do expect 26 to be better in that respect, because government is putting more money in. We have 700 euros tax exemption for everybody, which adds 90 euros or more for half of the employees in the country. That is 1% of GDP, almost in expenditures, more in consumption, right? So that most likely will make people happy. And with inflation falling, we had quite high inflation this year because of tax changes. It's going to be some inflation still next year, but around 3% probably. With wages going up by 5%, getting the extra net tax benefit next year, we are ready for consumption growth, which is more a broad-based growth coming up.
Yeah. Is it also partially because of Nordic markets opening up? And I mean, the exports, consumer confidence improving. Is that all like a thing?
So consumer confidence, we are expecting to improve with the extra money to be spent and inflation slowing down. That would benefit the consumers quite a bit. The Scandinavian market is a tricky one. Finland is still declining altogether. And year after year, they are disappointing. And the issues are really structural in Finland. It's not a business cycle fact, but since the Great Recession, basically almost 20 years, they have been the sick man of Europe. And so in that respect, Finland is not helping, Sweden a bit. But what Estonia is really dependent on is construction market and real estate development. And these cycles are longer. And also we don't see growth coming up from Sweden and Finland. It's more the Central Europe that is taking their place in the trade of goods. The trade of services is something that is growing. And we have seen healthy growth for quite many years. And until the Russian trade is reopened, I think that the trade in services will grow and the trade in goods will not really show strong growth. So in goods, we have had some growth this year, especially when you look at the overall exports, but imports is growing the same way, so it's not really benefiting GDP that much.
Mhm. Tadas, Līva, if you have any questions to Lenno. No?
Not yet.
I yeah. Just in case. No, you can think of it. Well, I have one. I know that, of course, if we look at the Russian border 2022, it's closed. You already described the Scandinavian markets. So what else is left? What I'm thinking is you have this beautiful thing, e-residency, with a lot of digital nomads, and so is that something that can be, let's say, elaborated? Maybe you can put some growth on it, and it can evolve in something bigger.
It's been a nice thing, but it's not really a macroeconomic phenomenon. And it's hard to make this business macro relevant, really. So it's helping a bit, but it's not what will turn the cycle. What is turning the cycle is domestic demand, defense spending, a bit of defense investments that is also coming up now, kind of late, but still better than nothing and better than never. So these are the factors that are supporting growth at the moment.
All right. So, colleagues.
And have a question. What is interesting for me from Estonia's case, I saw that the fiscal budget deficit is projected to be above 4%, yeah, approved by the government and by the parliament for the next year. But what are the projections for the 2027, 2028? Will you be able to keep such high deficits, or there are another plans how to increase budget income or to reduce budget expenditures in 27, 28?
So the plan is to go with quite strong deficits for the years to come. When you look at the 4.5 from the perspective that 3 of it is defense spending, if you go from 2 to 5, then you are left with 1.5. And then for the business cycle position that we have, this is not outright crazy to have a deficit like this. It's actually something I've been waiting for and pushing for. What I'm pretty confident is that they will not be able to spend that money. It's actually hard to spend the defense money. And the Estonian budget is agreed usually at very conservative terms, which means that the tax collection is going to be higher and spending smaller altogether. So it will not be 4.5, most likely. It's going to be something around 3% in the end. Then we have parliament elections coming in 27, early 27. So I don't expect anything to happen in 26. Planned for 27, it's only after elections when the new government might think that we need to do something about it. So at the moment, no.
All right.
I have another question, which is actually
Yeah.
very much linked to what Tadas was asking about. So the government spending and the deficits. So there is quite a big shift in terms of approach from the government side, I guess, because previously the government was more focused towards kind of a balanced budget or small deficits. VAT was increased. There were changes in taxation that were going kind of in the other way, that were more contractionary. Now we have moved, or you have moved to an entirely different field. How do you view that? Is that I thought I heard you say that that you have been waiting for this. Is that a good thing that you have moved towards a more expansionary fiscal policy? And do you think that this approach will continue going forward?
So I think that Estonia needed some boost for domestic demand, and increasing taxes usually doesn't help that much for increasing confidence and demand, and that has been keeping the Estonian economy growing. And altogether, in a way, the defense spending is not important that it's 5% of GDP. It's important how many bullets you can buy. So GDP growth is in a way more important than the deficit at the moment. And defense spending is now planned to be high for 4 years. It's not really, it doesn't make sense to do long-term investments from current tax income, especially when the economy is not booming. Also, Estonia doesn't have a tradition of doing these reverse purchases. Well, it is quite common in defense industry that the money that doesn't leave the country, and the country you buy comes from would buy something in return. That has not been the case. So it's going to be quite a lot of imports as well. So in these conditions, it's better to go with deficit rather than actually collecting this money on spot. So what was different from Latvia Lithuania, I think, was that Estonia increased tax rates and didn't collect taxes. Latvia Lithuania, to my feeling at least, was more looking into who would pay these taxes at the rates that we have. So Estonia has been very liberal on taxing bolt services, for example, and is pushing Europe not to tax bolt services. So anecdotal evidence is pretty stark that in reality, many of these couriers don't pay taxes, not even corporate taxes.
Yeah. Thank you, Lenno, for the insights. Līva, we turn to Latvia now. The floor is yours.
Okay, well, in Latvia, similar maybe as in Estonia, but we are seeing a recovery, and actually recovery, well, from the latest data and the latest reviews of revisions of data, we see that the Latvian economy has been growing already since 2024. So that's when the growth started in terms of quarterly growth, and now we are seeing that in 25, in the first 3 quarters, Latvian economy has grown by 1.7%, which is pretty decent, and it is finally that we see this growth, because previously we saw a couple of years with stagnation and maybe even a bit of a recessionary path in 2023. So what is the driver of this growth is certainly manufacturing. Manufacturing is actually the sector that in the third quarter was the biggest driver of GDP. We are seeing that basically in all of the subsectors, the growth in Latvian manufacturing is stronger than actually in the rest of the Baltics, which was a surprise to us, but this is how it is. And if we look at, for example, export orders there as well, we see that this path is upwards sloping. So that seems to be good news. Of course, the question is what will happen next year with because trade-related uncertainty is still there, but we can talk about that later. We are also seeing a notable increase in construction, actually in investment in general, and a big part of that is certainly construction investment. And actually, when we think about investment and construction, then a lot of this is driven by the public sector. So it's the defense spending, it's Rail Baltica, it's EU funds, the Recovery and Resilience Facility, which is going to end, or the projects have to be implemented by the end of the summer of 2026. So there is a lot of work that still needs to be done there. And this is another reason why the Latvian economy has really picked up pace. And furthermore, in terms of investments, we're also seeing a notable recovery in lending. So both household lending and non-financial corporation lending is growing at very high rates, actually the highest rates that we have seen since the previous boom times. So very many years now since we saw this high lending growth in Latvia. And this has also helped the residential real estate market recover. We are seeing that transactions with apartments in Riga, for example, adjusted for population in Q3 were the highest among the Baltics. So this really is, the space is really picking up. We're also seeing that building permits for residential buildings are also picking up. So this activity is ongoing in the construction market, not only due to this public sector public sector works, but also related to residential real estate, which is certainly picking up pace. And then I think the best news for me personally, I think, is because I have been waiting for this for some time now, is that private consumption seems to be finally picking up somewhat, because in Latvia we have seen that purchasing power has recovered, or on average, of course, because it's not always the same for everyone, but on average, purchasing power has recovered since this very high inflation times. We have the average household has regained its purchasing power, but private consumption was basically nowhere to be seen. But in Q3, we saw retail trade recovering. We saw kind of private consumption also kind of lifting up its head a bit, and we're hoping to see this private consumption recovery ongoing further in 2026 as well. And what helps us think like that is also the fact that confidence and consumer confidence has been increasing and is currently above the long-term average. So inflation, however, is also has been high this year, so that's a negative point for consumption and for the consumer confidence in general. But we're expecting that inflation next year will be somewhat slower, around also, like Lenno said, in Estonia around 3%, for us as well, something around 3%. And this inflation that we're seeing next year will be. This lower inflation will be helped by global energy prices that are fairly low at the moment. We're seeing global food prices that are on their way down, except for coffee. Coffee is still extremely expensive, but you can't wish for it all. We are seeing also in Latvia that next year, thanks to elections and as an election promise, is this decrease in part of the food products, the VAT decrease for part of the food products. So that will also help to bring inflation somewhat down. So inflation story for next year should be a bit milder than it was this year.
Mm-hmm. We will have questions probably to you, but I will give floor to Tadas because he will be thrown out of the room otherwise.
No, I think everything is okay. No one came, so everything is okay.
All right. So, Tadas, maybe if you can give your presentation, and then I think we can mix questions to Latvia and Lithuania. So, yeah.
Yeah, 2025 was quite stable and quite successful year for Lithuania. It's almost the end of the year, and I think that GDP in 2025 in Lithuania increased by around 2.5%. Of course, it's a little bit lower compared to the last year, as we had 3% growth in the real GDP. So yeah, we have some kind of deceleration, and deceleration mostly due to lower growth in gross value added in manufacturing, because the first half was quite okay for manufacturing, but the second part of this year, it shows that manufacturing started stagnating. But again, we had a very high base in the second half of last year, so that doesn't help for us. But overall, private consumption has been increasing. The growth maybe wasn't so strong as I was expected, but still, let's say consumer confidence remains the strongest, even in the European Union, in Lithuania. What else? We had in the first half of this year, we had a tax reform approved in the parliament, but again, it wasn't maybe so big and so scary for businesses and for households. Again, the motivation was, as for all Baltic countries, we are budgeting that next year expenditures for defense will exceed 5% from GDP. So yeah, it's a huge increase. But still, the majority of required funds will be borrowed. Another, I would say that decision from a parliament which is which will have a negative impact in the longer term in our economy. But of course, it will have a short-term positive impact for our economy is the second pension pillar reform. I believe you talked in the previous podcast, but but we believe that it will have a 0.6% from GDP impact to the next year's GDP growth. So my forecast is that next year we will have a one-off temporary jump in private consumption, and our GDP will increase by 3.2% next year, but we will have quite minor growth in 2027. So I believe that another Baltic countries will outperform us surely in 2027. But the next year, I think it will be a quite positive year for private for households and real estate market, or to be precise, residential property market, activity is accelerating and price growth is accelerating. And what I'm afraid that I'm starting to see the signs of some kind of bubble, and especially with possible withdrawals from pension funds next year. We have some changes in prudent lending requirements from central bank for the next year. So I believe that it will be quite hot at least in the first half of the next year in our housing market. So I think that the main threat, of course, for our economy for the next year is what will happen in global economy and manufacturing. I think our manufacturing is at the biggest risk. And if we don't have above 3% growth in real GDP for the next year, so it means that we have a more serious problem with manufacturing than we projected.
Yeah. Do you see some also signs of successful transition from this manufacturing work to, let's say, more maybe modern, more other areas?
Yeah, of course. In the last 5-10 years, I think that's common of all Baltic countries that the growth in services export, especially in IT services export, in financial services export. It was, I don't know, in case of Lithuania, in the last 5 years, I think average growth in IT sector, IT services export, it was above 10%. And in financial services, it was also above 20%. So I think it's one of the main reasons why we had stronger growth in our economy compared to the other in the region. It was that we had a huge growth in services economy, and especially in IT and fintech sector growth.
Yeah. Līva, I remember that last year when we met exactly this time, I guess, you mentioned that for the next year we need to think of more people in economy because our economy is just simply lacking people. How do you feel about this now? Because I think only now for the next budget we have put something for the improving demographics.
Yeah, indeed, the demographics are not improving at all. And if we're looking at both the natural change in population, but also in terms of migration, the latest figures that we have, which are always coming with a large lag, they do show that actually migration was again in the latest data in the negative territory. So even from the migration side, we are not getting a lot of support. So this is certainly a problem, and if we don't have the people to create the GDP with, I mean, it's unlikely that we will see very strong growth in the future. So, of course, yes, I mean, there's, I guess, many things that we can do to support families, but of course, I think primarily it is the choice of if you make a choice to have a larger family, it will mostly be because you're thinking that the prospects for your success in life, for your household, etc., are good in this country. So I don't think it is maybe that much even in terms of how large exactly is your childcare benefit, etc., etc. It's more about really the optimism about the future. And of course, at the moment, given the geopolitical situation, I can understand that this optimism is rather downbeat. So yes, we can do quite a lot, maybe in terms of incentives from the government side. Yes, maybe in the form of some other subsidies, etc. But that will not really completely change the situation if we have this pessimism over the geopolitical situation. So I think that still plays a role, unfortunately.
That's true. All right. Now at the end, a quick round of questions to Latvia, Lithuania.
I have a question too.
My short question to Līva, very short. What is your forecast for inflation for the next year in Latvia?
For inflation, we are seeing around 3% inflation. So this is our estimate at the moment. And actually, my question to you was very similar, because I'm also wondering how this pension reform will impact inflation, because as you said, that it will lift growth, it will lift consumption, and to what extent do you think that there will be this effect on prices?
Yeah, my forecast for the next year inflation in Lithuania is 3.5% for the next year. Very similar to what we have this year. Assumptions are that next year we have slower growth in food prices, as you said, and we don't have inflation from energy side. And my calculations about the one-off jump in private consumption, that it should add around 0.5 percentage points to the inflation for the next year. Someone say that I am too optimistic and it will be a bigger impact for non-food goods inflation, but we will see.
Yeah, it's tough to tell how many people will be withdrawing their funds. I mean, that's the key question, right? So...
Yeah. My assumption is that, again, we looked at what has happened in Estonia. So my base case scenario is 35% of withdrawals from pension funds. I think that was quite similar in Estonia case.
Yes. Lenno, do you have any questions to Līva or maybe Tadas?
Yes, I have a question for Līva about the secrets of Latvian manufacturing, because this looks like a success story. And then to Tadas is about the real estate market. Do you see signs of overheating in 26?
Let's start with
Okay. To be honest, in terms of manufacturing, I am not sure exactly what is the secret pill, because I think one thing is something that I think Tadas already mentioned, that simply in Lithuania had reached already a much higher kind of overall output in manufacturing, and perhaps for them it's harder to show growth on top of that. For us, we had been in a manufacturing slump for some time, so this increase started towards the middle of 2024, and now we have seen that manufacturing is continuing to go up. What is helping is certainly this revival also in the construction sector, because a big part of manufacturing is also linked to the construction sector, and so non-metallic minerals is one section of that, but also, for example, wood products are also linked to the housing sector, to construction. However, as I think you pointed out, is that mostly when we talk about wood sector, it is mostly about exports. So not really about what is happening within Latvia. And even when we look at turnover in exports, it is also growing. And again, it's not, for example, Sweden that is helping a lot there, because Swedish housing market, as Lenno said, has not really recovered yet, and it is actually quite far from recovering still. We have seen that there is an increase in the exports to the United Kingdom. There we see a notable growth. I think what also helps is that Estonia is picking up, that Lithuania is doing quite well. So I think those are our key partners that are also lifting the growth. So I guess, yeah, a range of factors, but I cannot point to one secret pill, unfortunately. Yeah.
Yeah. All right. Tadas, about real estate.
Yeah, as I mentioned, that I see the signs of overheating at the moment. Several factors. House price growth is already above a growth in disposable income or above a level in average net wages. Let's say now we have, according to various indices, the growth in residential property prices of above 10% annual growth. The growth in prices are stronger compared to the growth in prices in rents. What I see, it is a FOMO effect in the market because people are hurrying to buy apartment or the house because everyone is talking that next year the prices will be more expensive and that the inflow of second pension pillar funds will have a positive impact. So it's a perfect situation for the sellers to say that don't wait, buy now. Yeah, so we see some kind of hurry, but again, we understand that this is a temporary effect, and the market in 27 and 28 it will be much calmer. So yeah, but for the next year there is very clear risk of even higher growth in prices, and of course the activity will remain strong next year.
All right.
Actually, can I add?
Yes, yeah.
I thought of another thing, a bit of secret bill. Investment in, for example, in food production. We had seen quite major investments in food production in certain companies, and we're really reaping the benefits of that at the moment. So there is quite a lot of increase in exports of food products, in production of food products, and this is certainly also helping. So sorry about the interruption.
No, it's okay.
Yeah.
It's a good ad from your side. So this has been yet another very wonderful conversation and discussion. Līva, Zorgenfreija, Tadas, Povilauskas, and Lenno, Uusküla from all three Baltic countries. I wish you personally, to you, very happy 2026 and very successful one. And for all our economies, of course, the same. So thank you very much for participating in this discussion. Thank you.
Thank you.
Thank you.